What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update. So, getting into things, we are currently sitting at 942 subscribers and 30 videos. And I'm currently filming the 31st video, which is also the 29th portfolio update. If you are new here, it would mean the world to me if you could subscribe. It also helps me stay motivated to continue pushing out these videos and bringing you guys along on my journey. And for the rest of you, if you could smash that like button, that would be incredible, as it would help my videos with the YouTube algorithm. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, with that being said, let's dive right into my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. So first things first, I have two sources of income. One is remote work income, pretty consistent, pretty stable, and the other one is business income, which fluctuates up and down depending on the seasonality of things. But I have committed to contributing a minimum of $300 all the way up to $1,000 plus per month into my Robinhood taxable brokerage. It really just depends how things are going and where I want to allocate certain investments and things. I'm going to be treating this brokerage like a business, aiming for 30% plus high yield. And the way that I'm going to achieve that is through investing into high yield income ETFs, such as things like WPAY, HOW, QDTE, XTTE, XPay, Blocks, NVDW, etc. And I have committed to also getting into a maximum of 5 positions only. And I'm going to be alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy, investing approach. If you want to learn more about that, you can check out a video that Eugen Vasquez actually made on this topic on YouTube. So there's that. And I will be reinvesting the weekly or monthly dividends depending on which funds I'm invested in. And more recently, I have switched to doing a manual drip. Basically, what I'm doing is I'm stacking the dividends to purchase when the market is down. And drip plus always compounding is the portfolio growth strategy. So basically, I'm going to be rinse and repeating this until my account hits $1,000 per month in dividend income. And again, disclaimer, none of this is financial advice. This is for entertainment purposes only. I could totally fail and you guys can all laugh at me, or I can succeed and you guys can celebrate with me. Now, I wanted to dive into my dividend income milestones. This is why I'm growing my small portfolio. And this is basically so I can celebrate the small wins leading up to the bigger goal along the way. So last month, we already were able to achieve both of these goals. And this month, we are aiming to achieve both the $300 a month goal and the $400 a month goal. So we shall see if we actually end up hitting this. Lastly, we have my new strategy, and I did recently build this out and explain a whole video about this, but I have made some changes and I haven't updated the flowchart just yet. But basically, I'm looking to diversify a bit and hold some different positions that are a lot more stable or hold up a lot better in pullbacks and bear markets and what have you. And I'm also trying to make sure it's a position that also has a little bit of growth attributed to it. So currently, I'm only investing 100% of my allocation into high conviction, high yield ETFs. I like to call these HCHY ETFs. These are my main holdings as of right now, but I'm looking for something a lot more stable. I'm looking for something that will hold up my portfolio should it need to be, and basically transition to being one of my cores. And the reason that I'm doing this is because my portfolio is very high risk, because I'm invested into highly leveraged positions. That makes my portfolio as a whole very, very risky. So when the good is good, I experience a lot better than most people. But when the bad is bad, I also will experience that a lot worse than most people. So I need a new fund, a new ETF that's not as volatile, that has relatively stable growth, and is able to hold up my portfolio. So that's what I'm looking for. If you guys have any suggestions and feedback, comment them down below. I'd love to hear it. I've already gotten a lot of suggestions from other people in some of the investment communities I'm a part of, but I am looking to figure out or research a lot more before I commit to one thing in particular. Now, diving into the portfolio, we're having another red day, I think. We shall see, but it's not looking good. If we hop over here for the S&P 500, it's down 1.12%. The NASDAQ is down 1.90%, and then Bitcoin is down 1.79%. It's currently sitting at $100,150.73. It could possibly dump below that. We shall see. But yeah, this is where we're at. So we're at $5,137.02. Pre-market, we are down 0.23%. For my buying power, we have about $2,430.68. My margin buffer is sitting at 47 8.49%. So I definitely need to really heavily focus on paying off this margin. You guys are probably wondering why I haven't done that yet, but basically my business, I'm waiting on the funds to clear for that, which is taking a little bit longer than usual. So once that happens, I'll be able to deploy that and then pay this margin down and, at least put me a lot more at ease, if that makes sense. We have a total margin of $6,284.06. We have used up $3,853.38. And let's dive right into the positions. Diving right into WPAY, it's currently sitting at $49.48. So it is below its original price that it launched at. Our current market value is $5,443.54. We are down $300.72 or negative 5.24%. Our average cost per share was able to get brought down to $52.21. And as you can see, I did buy 10 shares yesterday. So now I have 110 shares of WPAY with a portfolio diversity of 60.55% and a maintenance ratio of 30%. For HOOW, it's currently sitting at $63.78. Pre-market, it is up 1.43%. My market value is $2,104.74. We are down $66.24 or negative 3.05%. Our average cost per share also got brought down to $65.79. And I bought 2 more shares yesterday. So we are at 33 shares with a portfolio diversity of 23.41%. I'm looking to see if this might dip down a little bit more today. And I'll probably end up buying a couple more shares just to get this holding up, because this makes up a big chunk of the income that I'm earning for this portfolio. So if I have an opportunity to buy under my average cost, bring that down, I will. And then it's sitting at a 30% maintenance ratio as well. And then last but definitely not least, we have NVDW. It's currently at $46.52. It's up 1.09% pre-market. And as you can see, it's held up pretty well despite the dump in the market yesterday. But our market value is $1,442.12. We're up $33.83 or 2.40%. Our average cost per share is $45.43. We have 31 shares and the portfolio diversity is 16.04% with a maintenance ratio of 30%. Like I shared earlier, I do need to find another holding, just one more holding only, where I can dump quite a bit of funds into there and it'll hold up my portfolio, keep the percentages a little bit more stabilized, if that makes sense. So we'll see if I can find something. Again, I've gotten a lot of suggestions and feedback, but I would love more if you guys have any. So comment down below. Diving into my dividend sheet here, we have this current data as of the market close of yesterday. So HOW is currently sitting at a total return percentage of 2.64%. WPAY is negative 1.10%, and NVDW is at 4.35%. And for market return, we are down 4.42% for HOW, 4.23% for WPAY, and 1.3% for NVDW. And if we scroll over here, you guys can see these are the dividends that we've gotten paid out for each of these funds here. And then if I scroll towards the end, you can see for my sold positions, this is how much dividends I've received in total sold positions for this year. But we are currently sitting at $410.99. I'm hoping this month that we can actually make or generate more income in dividends than this. So that way it will basically double what we were expected to earn for the year, or what we've earned for the year so far. So we'll see. Now, I wanted to dive right into X. If you guys aren't following me on here, I would really appreciate if you could. I have a goal of getting to 100 followers by the end of this month. But basically, I do post a lot more updates and things. Like you can see, I put the port is getting hit hard, guys. I was down 10.16% yesterday at one point. But yeah, give me a follow. It's at I'm Nomad Investor. Again, it's at I'm Nomad Investor. Now, I wanted to share these 2 images. So this is the first one, and then this is the second one. But basically, this was shared with me in one of the investing communities. It says key factors influencing the current market sentiment. And they include, number 1, tech stock volatility. The reliance of the US market on the tech sector is under scrutiny, and a recent wobble in AI-related stocks has added caution. I think this has to do with like OpenAI, NVIDIA, and all these companies like reinvesting into one another and then kind of cycling the funds back. I think that might have to contribute towards this. But anyways, the next one, the number 2, is US government shutdown. This is the most crucial one, I think. The ongoing uncertainty surrounding the shutdown is contributing to the cautious sentiment. So we don't really know when the government is going to reopen again. We're just kind of like pending and waiting on President Trump to announce that. But on Polymarket, it says they're not expecting it to reopen until December 1st, which would, I mean, it's already been the longest government shutdown in history, but I think it could only get further than this potentially. So if it doesn't reopen until December 1st, we're in for a long haul, unfortunately. The third one is the Supreme Court tariff hearing. So oral arguments regarding the legality of sweeping tariffs imposed by the previous administration have introduced uncertainty about potential policy changes, which could affect overall stock performance. The fourth one is positive economic data. Strong service sector surveys and ADP private payrolls data have helped to stabilize stocks, though some see this as casting doubt on the need for further Federal Reserve easing. And the last two are corporate earnings, which is better than expected corporate earnings in some regions like Europe, are easing concerns about the economic outlook. And then the last one is reduced volatility. The CBOE volatility index, or the VIX, has fallen, suggesting that investors are refocusing on fundamentals and seeing recent sell-offs as corrections rather than the start of a deeper decline. That is the hope of what's going on right now. I think it is, because truth be told, even though my portfolio got hit hard, again, because I'm in high risk positions, very volatile positions, the S&P 500 as a whole and the NASDAQ and all that, they really didn't dip that severe. Like, I think it was only like 1 or maybe almost 2% at most. Correct me if I'm wrong, guys, but that's not really a significant pullback. That's just a very small correction. So hopefully, if all the news that comes out either today, later down, or maybe Trump will tweet or something over the weekend or in the coming weeks, that will help the deeper decline to not continue, and instead we'll see like a recovery and rally into Christmas. Now, I wanted to hop into this. Roundhill Investments, they reached 10 billion in assets under management. Well done, Roundhill. You guys have created amazing funds, and a lot of people in the ETF or dividend investing space have been investing in your funds as a result. So well deserved. Next, I wanted to cover something that I actually reposted on my X account. But basically it says, just in, Robinhood is considering buying Bitcoin for its balance sheet. So I think it's safe to say that the future of Robinhood is green and orange. That's really interesting news. I'm not sure how this will impact Robinhood stock as a whole moving forward, but I'm hoping they don't move in the same direction as MSTR has. Next, we have this. Unfortunately, yesterday, guys, there was the announcement about October job cuts. It was not pretty. It was pretty brutal, but it says markets selling off after the biggest October job cuts in 22 years. Confidence in the economy is fading despite recent earnings beats. And that's really what brought down Robinhood yesterday, because actually Robinhood was pumping pre-market. And then once the news about the October job cuts hit, boom, everything just started dumping. So it says US-based employers announced 153,074 job cuts in October, which is up 175%, according to Challenger Gray. Now, Challenger Gray says October US job cuts highest for a month since October 2003. That's significant. Next, we have this post by Richie B, aka Wanna Be Fresh, on X. He says, if the Supreme Court rules tariffs unconstitutional, it could force refunds, giving a boost to companies that paid the most. Names like CAT, NKE, BBY, Five, GPS could benefit the most. Decision expected by January, but refunds may take months to process. Markets starting the day with massive sell-offs. I'm holding steady and scaling my buys. That's crucial in times like this. That's why I didn't really like ape in as much as I usually do when I saw that WPAY is continuing to dump a bit more. Even HOW, I only bought very small shares in comparison. But yeah, I'm going to be keeping an eye on all this. Hopefully, we can figure out what's going on with these tariff stuff, because it has dramatically impacted everybody as a whole, or all markets as a whole, as of this entire year so far. And it's going to be good to get some clarity on this. Now, this one's pretty interesting. This is from an X account called Paradise Mint. It says, I don't think YieldMax expected the cold responses they received on this post. Your resolution is to just open more new funds, claiming problem solved didn't go very well. Whoever thought this was the solution should be fired immediately. Now let's read the original post. It says, we asked, you answered. Investors wanted income solutions built for more than yield alone, designed to deliver consistent cash flow and preserve greater upside potential. Coming soon, the YieldMax Target 25 ETF family, including MSTT, NVIT and TEST. It says, tons of posts here about YieldMax not fixing existing funds. The existing ultra high yield ETFs are not broken. There's nothing to fix. They're working as designed. Some of them will naturally decay in share price over time. This is totally normal. Eventually, they will reverse split, reset the share price, and keep making distributions. Share price only matters if you don't realize this fact, or if you're an investor who jumps in and out of these funds at random times. Many investors think that they should be getting 80, 90, 100% or more returns from a fund and get NAV appreciation or stability. That will never happen. If you want that, you have to synthetically create your own fund by allocating a portion of your investment principal to a growth asset. For example, 25% Bitcoin, 75% ETH. If you want NAV appreciating or NAV stable funds, which many of you have been complaining about, YieldMax just delivered those funds to you. I don't know. I mean, I understand the sentiment or what was shared here, the thesis. There is some truth to this. However, they already fumbled the bag. I don't think there's any way they can fully recover from this, no matter what they released, unless they fixed their funds, unless they optimize their strategy to be better. Hopping into another Richie B post, he says, taking politics out of it and looking purely from a market perspective, there are two key takeaways here. Markets will likely react negatively until there's clarity on tariffs. They'll turn bullish once trade deals are finalized or if the Supreme Court removes tariffs altogether. In other words, there's roughly a 66% chance of a bullish outcome tied to tariffs. The only risk is if we see extended delays, either from prolonged negotiations or Supreme Court gridlock. That uncertainty could be just as bearish as stalled trade talks, aka, in my opinion, a true double-edged sword. The reason why he posted this was because of the Kabisi letter, where it says, breaking, the odds of President Trump's tariffs being ruled as legal by the Supreme Court collapsed to just 18% per Polymarket. Insane. Anyways, I hope you guys enjoyed today's portfolio update. I know there's not a lot of changes or anything exciting, but there's a lot of news and things that we need to pay attention to. So I encourage everyone to be vigilant as always. Be strategic. Obviously, if you have some dry powder, don't use up all of it, in my personal opinion. Again, not financial advice. Just be mindful of that. You know, we could see some more pullbacks. We could see some more of a correction. We're really not certain. We don't have any certainty right now in terms of the tariffs, in terms of the government shutdown, and definitely in terms of like the AI sentiment right now. So just be mindful of that and make sure you are investing according to your personal strategy and whatnot. If you guys enjoyed this video and you are a new subscriber, make sure to smash that subscribe button. And in general, for everyone else, make sure to smash that like button if you haven't already. If you have any comments, suggestions, feedback, or anything of that nature, comment them down below. I'd love to hear them and read them. I do read almost every single comment on my channel. And without further ado, until next time, guys, peace.